But that is exactly the narrative of money, guys. Like, come in closely. The entire narrative of money is that as long as enough people believe the story is true, then it will retain its value. When people no longer believe the story is true, that is when the monetary policy of that financial asset declines or goes away. The question you have to ask yourself is, guys, when are we going to stop believing in the narrative of the Fed? And when is that going to crumble? What's up, internet friends, founders, and the Entrepreneur Curious? You've made it, and you're here. It's Venture Daily with me, Peter Saddington. What's up, guys? It is News Bits from a founder's perspective. And today, many of you guys on this wonderful, wonderful self-quarantining Monday, I know many of you guys are out there self-quarantining, but I'm going to tell you guys, I got the garage door open. The day is beautiful. I am enjoying a little bit of the a little bit of the mech Jew, a little bit of the beer going on here. I know, but I'm chilling, guys. I am chilling. But today, I came across a news article, and some of you guys are gonna rejoice. I know. Some of you guys are gonna be like, finally, he's getting back into the crypto game. It's not that. It's not that at all. It's just, well, actually, I'm going to be covering a little bit more crypto these days because it's just something dear and close to my heart. But in today's article, so we're only going to be going over one article on this Monday, on this self-quarantining Monday of yours. It's why Bitcoin's safe haven store of value narrative is dead. Well, you guys know we've been down this road before. We've been down the road of saying that Bitcoin's dead and it's not what it used to be. And certainly during these trying times, people are pulling out of Bitcoin because maybe cash is king during a recession, or cash is king during any type of crisis, though I don't see this as a crisis. I'm not an alarmist or anything like that. But let's see what this article's author has to say, and I'll give you guys my 2 cents. As well, at the end of this article, I'm going to be talking just a little bit about how I'm doing during this self-quarantining. I hope you guys are making good decisions and staying safe, all things considered. But I'll give you guys my 2 bits. Am I getting cabin fever? Not yet, guys. I don't have cabin fever just yet. No cabin fever just yet. But let's get into it, guys. This is Venture Daily. Why Bitcoin's safe haven store of value narrative is dead. This is by Noel Atchison. Listen, that whooshing sound you hear is not just the Bitcoin, BTC price. It's also the sound of a safe haven narrative flying out the window, probably forever. I don't know about that, guys. I don't know if it's going to be forever. March 12th was not Bitcoin's worst 24-hour price crash ever. That honor belongs to April 11th, 2013, when Bitcoin fell by almost 50%. Comparing the two crashes helps to understand what happened this week. It also helps to inform a picture of what the sector could look like moving forward. For context, in April 2013, Ethereum had not yet launched. Mt. Gox was the largest Bitcoin exchange, and the Harlem Shake meme dominated the internet. I remember this quite vividly, guys. That Harlem Shake, though. The previous month, the price ranged between $34 and $94, and the average transaction, according to Coinmetrics, was under $800. Chinese demand powering the retail-driven market. Professional custody services were just warming up, like BitGo. One of the first was formed in 2013, if I remember correctly. Coinbase was less than a year old. That's right, 2012, guys, is when Coinbase came out. If I remember correctly, I became a customer of that Kickity Coinbase back in 2014. Coinbase was less than a year old. BitMEX had not yet been created and had not created the perpetual swap just yet. And heck, CoinDesk didn't even exist. That's where this article is coming from, guys. In 2013, Bitcoin was the asset of the future, a decentralized representation of value, a protest against powerlessness, and a way for savers to reduce their vulnerability to central bank action. Market participants believed in the story. By some accounts, the price started to rise along with international attention on the Cyprus banking crisis, in which a haircut was applied to all deposits over £100,000 at the two largest banks. If you were a 2013 Bitcoin investor and you time traveled to now, you would not recognize the scene. Chinese demand had dissipated. Mt. Gox was a bitter memory. A lively derivatives market drives volume. Big incumbent financial institutions have set up digital asset desks. Really, you kind of have to pinch yourself, guys. You kind of have to pinch yourself. You also might be a bit alarmed. You'd love the legitimacy and the platform sophistication, and you'd get genuinely excited about all the smart people who have left their finance jobs to work in crypto. You'd almost certainly be stunned at the sector. You would be, because it's evolved so much, and it's evolved so quickly. You'd be thrilled that the institutions have finally taken an interest. Finally, professional traders have grasped the possibilities, and those pump and dumps guys, those pump and dumps were all over the board. But you'd also wonder where the ideology went, where the focus on empowerment rather than profits went. Crypto markets went and grew up. They substituted their hoodie for a button down and put on some big boy shoes. They made new friends, became more responsible, and entered into a new world of risk. So, is this author, is she setting us up for the tale of the two crashes, one back in the 2012-13 era, and now, is that what she's doing? Back then, most market participants were long, as you probably still should be today, guys, on that busy beat. The absence of liquid derivatives market made shorting relatively cumbersome and expensive. Well, the trading systems back then kind of sucked too. Trading was dominated by those who had taken the time to understand that busy beat, and they acted accordingly to whether they thought it was over or undervalued. The April 11th crash was triggered by profit-taking. The price had more than tripled in the previous 2 weeks, and it was a narrative-driven slump. What's more, it was isolated. That same week, the S&P 500 was largely flat, as was gold. It was entirely a Bitcoin story. Today, the market is dominated by professional trading desks. They know about the markets. While many are probably attracted to the idea of a fiat alternative, their jobs are about playing numbers. For them, it's not about Bitcoin, it's about volatility. And I would go even farther. For a lot of them, they've lost the essence of Bitcoin, because now it's just an asset class to make that money. Now, I don't know if this is a bad thing, but it's a natural evolution of something that was revolutionary and now relatively mainstream in certain circles. Last week's crash was a liquidity event triggered by margin calls in crypto and other assets, and by a massive investor panic, which we can all understand because of that COVID stuff. This crash was about raising cash and covering liquidity. It had nothing to do with Bitcoin itself, nor was it isolated. The S&P 500 suffered its worst 24-hour slump in history. Bitcoin's story was not part of this activity this last week. Bitcoin was just another financial asset getting trampled as investors headed for the exit. That is why its safe haven narrative has died. Now, let's see if she gets this right. I think I'm probably going to be arguing with her a little bit here because I disagree on the premise, but let's just see what she has to say. And that's a good thing. Let's look at why. First, Bitcoin was never a safe haven. I think a lot of people's minds it was a safe haven. Even before this recent crash, it was just too volatile, too young, and too untested for that role. In spite of the lack of logic, the narrative endured because so many people wanted it to be true. But that is exactly the narrative of money, guys. Like, come in closely. The entire narrative of money is that as long as enough people believe the story is true, then it will retain its value. When people no longer believe the story is true, that is when the monetary policy of that financial asset declines or goes away. The question you have to ask yourself is, guys, when are we going to stop believing in the narrative of the Fed? And when is that going to crumble? Now that we can put up that legend to rest, an asset can fall by over 40% intraday is unlikely to ever be taken seriously as a safe haven. But we've seen this before. We've seen Bitcoin, even with all of Tone Vays, all of his projections. We've seen this before. We've seen it go down. And so is it just part of the market dynamics today, the market as a whole today, or is it greater than that? Can Bitcoin last beyond all of this? Perhaps give Bitcoin a more justifiable role in portfolio management in the future. That could be an idea. Also, this week has revealed that there is no such thing as a safe haven. Gold and T-bills, the assets the market traditionally turns in to times of turmoil, also fell, largely due to liquidity squeezes. Investors were scrambling to raise cash this week, but even that safe haven asset could come under strain as the global economy tips into recession and geopolitics adds tensions to monetary policy as well as faith in sovereign credit. Yet portfolios need diversification. Market assumptions may have been turned upside down, and trust in correlations may take some time to recover, but that underlying math hasn't changed. Even with investment principles in turmoil, the demand for alternative assets will not go away, and professional investors are already taking stock, adjusting objectives, and rebalancing. So, what is she saying here is that Bitcoin is just part of the landscape of financial instruments, financial assets that took a beating. It just took a beating like everyone else. It got the whole pwn, guys, But here's the thing. Well, let's get back here. Here's the thing. Is Bitcoin just another financial asset to be played with? Is it just another transactable asset class where we can make that money? Or is it really still a store of value, a safe haven for tough times? That is a pressing issue, which I'm going to talk about in just a little bit, by the way. So the question you really have to ask yourself now, is there a new role for Bitcoin? In a world worried about income, assets like Bitcoin and gold that doesn't depend on cash flows for the valuation are likely to occupy an increasingly important role in investment allocations as alternative assets. The greater the range of alternative assets, the better for investors, especially in troubling times like these. Analysts and fund managers will be looking for opportunities to offset the upcoming shift in market fundamentals. Many are likely to take a closer look at that busy beat, which does not depend on macroeconomic metrics. In a market where relationships are broken and assumptions are smashed, an alternative asset, this busy Bitcoin, vulnerable as it may be to the money flows, does start to take an appealing narrative of its own, more innovative and more credible than that of a safe haven. So maybe what she's saying here is it's actually a super asset, in which can take market beatings like everyone else, but it's a great financial asset to make money on, especially with these swings. Is that what she's saying? With this, the integration to traditional finance that we wanted for Bitcoin can do so much more than just make it vulnerable to the ravages of global sentiment. It can also finally bring it to the opportunity it deserves. And you know what she's saying right there, guys? I'm going to put it right here. You know what she's saying when she says that Bitcoin can finally become the opportunity that it deserves? What she means is finally it can be traded like every other asset out there. It can be traded like every other asset out there, with market swings, with market fluctuations, loose correlation, heavy correlation, stringent correlation, no correlation, poo-poo. It doesn't matter. It's an asset class to be manipulated. It's a financial asset class to make money on. Financial haven, poo-poo. Maybe we should just look at Bitcoin as another transactable asset that we can just, do technical analysis on and fundamental analysis on and make that money. So the question you have to ask yourself now, is the narrative of Bitcoin as a safe haven, is it been destroyed? Is it gone? Is it away? Is it completely blown up? I don't think so. The reason is because I've been, and some of you guys have been in Bitcoin for multiple years now. Some of you guys close to 10 years, maybe 5, 6, 7, 8 years, right? Something like this. I've certainly been around for nearly a decade in the Bitcoin space. And I can tell you, is it a store of value? I still believe so. Long term. What really matters here is your perspective. Are you looking to make them gains on Bitcoin? Or are you looking at it as an opportunity, as maybe diversified opportunity like gold, where you should diversify in your investment, thesis and your investment portfolio? And is it one of those things that you just don't touch, or should you touch it more based on price fluctuations? I still think it has value as a storage, as a store of wealth. I still see it as a potential haven in the technological future that we're headed to. Could anyone in the world have ever predicted that we're going to have some sort of mass pandemic happening in the world today? No. Could we have ever assumed that these types of consumer and retail behaviors are going to happen and it's going to affect Bitcoin? No. Can we look back and do back testing? Can we look back and do historical behavioral analysis and say, yes, this is similar to 2012, 2013? I guess. But technology has changed since 2012, 2013. Consumer behaviors have changed since then. Understanding and education and information around Bitcoin and the amount of knowledge around it has changed. And so, are we just reacting to a brand new active stimuli called coronavirus that's making us behave in funky ways and pulling out that Bitcoin for cash? Maybe. But I don't think that negates. Here's my point, guys. I don't think that negates the power and potential of Bitcoin being a long-term asset for long-term hodlers. Call me crazy. Call me a Trace Mayer wannabe, the hodler of last resort and hodl on and hodl strong. Actually, I don't really know his position anymore. It seems like he's, like many people, has changed his tune, and that's okay. But let me know in the comments below, guys. Am I off? Is Bitcoin still a safe haven? Is it still a long-term hodl? Or should we be looking at it as a financial asset to make money on in the short term? Seems like a lot of money to play with. But you guys let me know in the comments below.
Did you know that there's even more value than just audio or video? Follow us on Twitter, Instagram, TikTok at VC Hunting, and make sure to sign up for the VC Hunting newsletter, where you'll be able to get weekly news on venture capital, startups, founder stories, and the occasional wisdom extracted from Peter's brain. Go to vchunting.com to sign up. And now, back to the episode.
Welcome back to Venture Daily, one of the fastest growing daily news shows in all of venture media. This is a Monday, right? Past the weekend. Some of you guys, this is moving into week 2 of your self quarantine. Excuse me. I'm drinking here a little bit, guys, during the break. Actually, for some of you guys, it might be week 2. Actually, I know someone where this is week 3 of self-quarantining. Did that individual go a little too far? Who knows? You just don't know what's real anymore in this world. But I'll tell you how I'm handling it. I just don't know what's wrong with me, guys. I just don't know. I really don't know what's wrong with me. I feel really excited. I feel really anxious, like a good anxiety, not a bad anxiety. A good anxiety. I feel this tension and energy that's coming into me all the time, ever since this last week of quarantining and this last week of just getting to a tipping point with governments, local governments, big governments, private companies, public companies shutting down, sending everybody home to remote work. Like, all of this is happening, and for some of you guys who've been with me for so long, you guys know that I love watching the meta. I love watching big market movements. I love watching big data sets of behavior and market changes so I can understand where to plug myself in. And there's just something absolutely exciting about this idea that the world is being forced in some way to more remote work. Now, what is interesting is I had a conversation with the dude a couple days ago in which he said work from home is just not going to work long term. All these telecommutes is not going to work. And I asked him, I said, why? I mean, all the technology's there. Certainly, I'm relatively proficient at leveraging online technology for communication in many different ways, probably more than most. But he gave me a really intriguing argument. And the argument he gave me is he said, because the vast majority of people in corporate America actually don't know how to work remote. They actually don't have the mindset to work remote. They don't have, it's not a tool issue. It's not that they don't have the tools. It's not that they don't have a computer and they don't know how to install the right software. It's that they do not have the fundamental models and mind and personality to effectively work from home. And that was a really interesting assertion that he made. And I never thought of this. I just thought, for me as a technologist, as someone who tries to be on the bleeding edge of things, I always thought, well, if times have changed, change comes with time. Time, la hose and chains and swinging things. You guys know what that's from? Just another
smoke weed every day.
Anyway, I just figured that people would change with the times. But he gave me a great argument. He said, most people, they don't have the mental capacity. They don't have the models to do it effectively. And they need to maybe feel like they're productive, even though they're only really productive 20% of the day. The rest of the time, they're just taking long lunches and messing a boot, It was really interesting. And it was a really interesting argument. And as excited as I am about a remote first, mobile first, video first world, it's going to be really interesting to see how other people handle it, especially those who have been working for so long in a traditional, I wake up at 6:30, I shower, I'm in the office by 8:15, 8:30, and I work till 4:35, 5:30, and that's how life works. And so it's going to be really interesting to see. But I'm here. But for me, I'm just ridiculously excited. Like, I was up super late. I've been super late so many of these nights, just thinking in bed, thinking about, what can I build? What can I create? How can I provide value? It's this interesting, tension, because there's things that I want to create. However, with the lockdown and all this stuff, I don't have access to the resources I need to be able to create stuff. Some of it requires real world assets, real world things that I can't get to because businesses are closed and they're making things harder. And so, anyway, I'm just excited about it. I don't know about you guys. I think everyone's in a different position, right? Everyone's in a different place in their lives, whether it's financial, emotional, work, all this stuff. And so it's hard to create any type of blanket statement. But I will tell you guys, I'm feeling good, all things considered, and I feel like that we're all going to be able to persevere through this effectively. Long live Bitcoin. Long live Bitcoin, guys. Have a good one, and I'll see you guys tomorrow. Let me know in the comments below any thoughts you might have. Peace, guys. Peace.